The crypto fear and greed index is now currently sitting at a pretty split even 50 value. Does this mean that this is a buying opportunity? That is what we're going to be discussing in this video, ladies and gentlemen. Welcome back. If you haven't already, please make sure to hit that like button, subscribe to the channel if you haven't already, because your support means everything to me. Thank you so much. Now let's get into the nitty gritty here, ladies and gentlemen. What you can see here and what this can be telling us without even looking at the charts is a few things. What I can definitely tell you is that every time it hits the extreme fear or extreme greed, those are absolutely 100% opportunities to either take profits or buy more Bitcoin without a doubt. Now that Bitcoin has bounced, we have gotten out of that extreme fear zone. Now Bitcoin has historically only hit the extreme fear zone maybe 6 or 7 times over a period of 8 years or so since this was actually developed. Similarly, we've seen Bitcoin hit the extreme greed maybe only 5 or 6 times. So those are definitely times when you should be taking profits or selling. It's been quite accurate, and there hasn't been a single instance when this has failed on us. Now, there are drawbacks to this, which is that price is quite oscillated with the price action, meaning that it doesn't work entirely with time or price. It doesn't give you a perfect entry nor a perfect time to buy Bitcoin, because during times of extreme fear or greed, prices can change vastly. It can go back into the neutral and then go back into the extreme fear, and that oscillates with the price, and it may be at a lower level or a higher level. But there is one thing for sure. If you're able to utilize a DCA or a dollar cost average strategy, you are bound to eventually end up in profits, or you may have already sold a local top if you sold the extreme fear. So this is a very important thing to keep in mind. I think a lot of people are forgetting about this indicator, and it's very important one, if that. We should be looking to buy more Bitcoin even if prices continue to keep dipping just based on the crypto fear and greed index, because the metric is currently within that neutral extreme fear and fear levels. It hasn't failed on us again once when we're talking about strictly swing position trades. So if the value is at a flat 50 right now, we can start using other metrics or means of technical analysis to help us find which way the meter will change. Will it go to the more fear, or will it go to the more greed side? And this is where we can use the Elliott Wave Theory, which I specialize in. Now, right now, since our last video, we've been discussing that this wave 1-2 is now pretty much complete. I think we have a protected low. I have high conviction that we do have a protected low, and I don't think we will be reaching for another low unless proven otherwise. And I think at this point, it's pretty clear that we have a pretty nice impulse off the lows here. Now, there are a lot of ways we can kind of configure this in terms of how this Elliott wave structure is, but for now, it does look like there is a pretty nice looking 1, 2, 3, 4, 5. And if we actually pull up the wave structure and how it looks in terms of the right look, it does arguably look pretty objectively clear as a 5-wave impulse. It doesn't have to look perfect, but it does have that 5-wave impulsive characteristic. So what happens after a 5-wave move? You want to be looking for at least some kind of minimum expectation of a pullback as an ABC. Now, this ABC can be transformed into any corrective structure other than a triangle, and this can be really turned into any variation of some sort of an ABC value, or denoted as a WXY complex correction. So what that means is, right now, as a beginning kind of assumption to be making is that we may be looking for a controlled pullback. And if we do get a controlled pullback, these levels should be acting as support, especially with Fibonacci levels in sight. And what that means is we should be, again, staying above these protected lows, and anything above the 61.8%, 78.6% zone of that golden Fibonacci level should be giving us a pretty good fair sentiment that we are going to be looking for further upside. Now, there are a lot of other scenarios here, and one other scenario is a possible flat idea here. Now, this flat idea is a little bit far-fetched because it did reach the 161.8% for this B wave, but again, we can still technically see this as a pretty nice one too, because the preceding waves gives us enough evidence that it does have another possible 5-wave completion where this is maybe marking the top, and this is going to be considered as a range. Now, I know a few people do accept the 161.8%. I'm kind of on the fence. I'm usually using the 138.2% as the maximum value for a B wave. So, true Elliottians or wave technicians may seem this as invalid because of the extremity of this B wave. However, we do have a pretty nice channeling here for this 5-wave impulse structure if we're seeing this as the termination point of a wave 1. So I'm on the fence of it, and I am still open to interpretation for this idea. And it'd be nice to see how the Elliott Wave International really follows up onto this idea as well in terms of the guideline of using these Fibonacci levels for this B wave. But what that means is the idea of a more more general perspective is that we're still looking for further upside as a possible wave 3 continuation. We're still looking for how this wave 1-2 is being developed. And I think for the rest of the month, especially with the whole psychological mindset of sell in May and go away, this kind of fits that self-fulfilling prophecy that we may see this kind of controlled pullback. And I think people might be interested in that $80,000 to the $90,000 levels before we reach further higher levels. We've been talking about Bitcoin's balance ever since these levels over here. We made that bias swap where we were expecting lower levels, but we made that bias swap quite nicely, and we got that 20% move to the upside, and that is quite a bit for a Bitcoin price action move. So again, right now we have a lot of variations, but for now, I think that we can be looking for a lot of types of variations here for this wave 1-2. In fact, it can even turn into a flat in itself here where we create one more high above here, maybe retest at $100,000 levels and then get rejected once again because we do have some strong resistances at these levels over here. It just makes sense that we may get rejected from here. We are getting kind of rejected already. We've been kind of stuck in the zone over here, so it makes sense we can be stuck again for the next 30 days or so. Who knows? But then that doesn't really change the overall view because, again, we can be turning this into a larger flat structure. We should come back down into this range over here, and then we should be looking for that wave 3 eventually as the markets decide that these levels are going to be acting as support, and then we're going to be working for the higher levels to the upside. That being said, I don't really have any bearish scenarios because a primary idea is that this has been a pretty clear 5-wave impulse off of the lows. We've gotten a pretty nice 30% bounce or so, and that to me is large enough to say that we can be still working within a bullish scenario. And I think right now there's no real consideration for even a bearish scenario at this point. Again, I would have to start really retesting the 61.8%. And at that point, we can maybe make some different judgments on what the bearish scenario might be the outcome. However, I think right now, we do have a pretty clear 5-wave impulse off the lows that gives us pretty strong conviction that we're working for a bullish continuation in this current cycle. So how does this bullish cycle continue? And on the larger macro scale, again, bottom-up analysis idea is exactly the same. We're expecting what could be a larger wave 5 to the upside, which means that this move here as a wave 1, 2, we're going to be working for a 3, 4, 5 respectively, and that should give us that overall primary extended 5th wave here in that primary 5th wave over here, and that in itself does kind of align with what the wave theory suggests as well, where commodity markets observe strong 5th waves. If you are able to identify that this wave theory wasn't as strong, especially within the current cycle, that still deems to be in a strong bullish cycle, wave 5s in commodity markets, especially like gold that we're witnessing, are experiencing these very strong wave 3s and strong wave 5s, most likely as strong wave 5s, because those are usually the final pushes of the waves of internal wave counts and the larger primary wave counts. So right now, I think that this right here does kind of still fit into that idea. As long as we stay above the bearish level, I think that this idea is still the current primary scenario, that we may be working for much higher levels, much higher than what people may be anticipating. Maybe some people are seeing, end abruptly around the 130 or 140 levels. Again, we won't know specifically, but right now we can make some fair assumptions that this 5th wave is going to be extending, but we won't know until we actually get, some clear impulses off the lows here. Right now, we're only still working within that beginning impulse wave. This is just a minor degree of this wave 1, 2, and then whether that 3, 4, 5 is going to extend, that's something that's on the table still. We have to wait. Time is the only answer here, right? So I think right now, this is the overall primary scenario that I am looking at. There are a lot of other ways. If you go to my previous videos, I do talk about other macro scenarios, such as a larger diagonal scenario. But right now, I think this idea kind of fits into what we're seeing for this current cycle. And it just fits the overall wave counts from a top-down and bottom-up analysis, where everything is just seemingly fitting like a piece of puzzle. And you can see even with even the worst case scenarios, these scenarios that don't really match up and have some market inefficiencies, just like this one too. This is more of an educational perspective. Again, everything's still leading towards the upside as we're still kind of completing and how we're going to be concluding this wave 1, 2. So hopefully that was helpful, ladies and gentlemen. Thank you very much. Hopefully that was a little bit of a more helpful insight into the markets. I think we are still going to be working for a larger bullish continuation. So please make sure to hit that like button, subscribe to the channel if you haven't already. If you're you're interested in joining the Patreon memberships, where I do 2 video updates a week, you can, dip your waters or dip your toes into the water of what I am seeing in between these videos. You can see what analysis I put out, and then also we do offer an XForceGlobal Discord membership that has been operating since 2018. So if you're interested in joining that, we have about 1,000+ members in there. Please feel free to reach out to me with any of the links in the description below. Thank you so much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.